please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Afternoon. Welcome to Business Lunch. I'm Sonia, and the markets have not seen any great recovery. In fact, through the course of the day, the Sensex is down almost about 400 points. The Nifty has been under quite a bit of pressure, and at no point have we seen any conclusive recovery. If you're looking out for where the stress points are, the Bank Nifty really is the one that's been dragging its feet today. So the Bank Nifty is down about 350 odd points. And even from the frontliners, if you look at it, just pull up the contribution chart and you'll see where the pressure is coming in from. HDFC is your top loser this afternoon, down about 2.5%. And the others like SBI, Bajaj Finance, etc. are following suit. So really, that whole list is peppered with names like the HDFC Twins, Reliance, ITC, etc. dragging the index today. But it's not just an India problem, right? It's a problem across the globe. Asian markets also traded largely lower. Europe too opened lower as US and China trade tensions weighed on investor sentiment. Reports in fact suggest that the US could be imposing new tariffs on $200 billion of Chinese goods as early as this week itself. Important to watch out for also, the leaders of North and South Korea will hold a 3-day summit this week. Also in the globe, the powerful storm which killed dozens of people in the Philippines has made its way across southern China. Typhoon Mangkhut is one of the most powerful storms to hit the region in decades. All right, but the big story in our own markets, the measures that were announced by the government on Friday to defend the rupee fall and curb the widening current account deficit failed to bring any respite to the rupee fall. In fact, the currency has been weakening against the US dollar. It touched a low of 72.67 this morning. It's seen a tad bit of a recovery, but nevertheless, a lot of experts have called the measures underwhelming. Lata joins in now to tell us more on that. Lata.
Well, from lows, yes, but broadly the pressure continues, and in a jiffy you can see that at every high of the rupee, if you can call it that, there has been consistent selling. It's a broad EM currency sell-off, so we can't stand out too much irrespective of what we announce singly. It might create some volatility where those who are easy short sellers want to cover, but broadly the trend continues that emerging market currencies are being sold off. Even when their equities find some bit of support, the currencies are not finding support, and that's partly because the trade tariff standoff between US and China is largely continuing, and hence the expectation of renewed EM weakness. Yes, the dollar index shifted from about 94 to about 94.84, and that has seen some relief in some equities, but it's not a whole lot. We must remember that there are a lot of unhedged positions with importers, and every time you see the dollar cheapening just a bit, you will see them coming in and buying some more hedges. And that's why at 72.42 you immediately see it getting pushed back to 72.45, 46. Even at 72.42 there are enough short sellers in the system, and there are people who want to go long on the dollar. The bonds are the ones that are even more interesting. As the Reserve Bank announces an open market purchase, one was expecting that there'll be some impact, but even that is not a great deal because the rupee weakness is continuing to keep Indian bonds as well weaker. And we saw right at the opening an 8.17 compared to an 8.13 Friday overnight close. The point is the steps announced on Friday, where they will be effective will be a medium term. In the near term, there was a bit of, already bought on expectations. The rupee was covered on expectations. So actually now you're seeing more selling on the news. We saw that right in the beginning itself. So at the moment, you must expect that every time the rupee goes towards 72.40 or even 72, you will find a lot of importers coming in and wanting to buy. And as long as the overall EM weakness continues, I don't see much respite for the rupee.
Okay, no great respite for the rupee. Yes, there has been minor recovery this afternoon, but it really pales in comparison to the fall we've seen over the last many months. However, on that note, we spoke to a host of experts on what they've made of the Prime Minister's Economic Review meet outcome and the impact it will generate on the markets and the macros in the near term. Listen in.
definitely we are a part of an emerging market scare or fall, or so to say. But at the same time, we do have our own issues, which is the current account deficit. Based on whatever measures which have been announced by the government, I would still say, since the action was a little underwhelming, maybe 72 to 72.60, 72.65 kind of range for the day. The range for the 3 months, I would presume, is more, could be in the region of 71.5 to 72.5 to 73, depending upon how EM currency stabilize. It seems that we are now going towards a period when Reserve Bank would probably want to keep liquidity tight rather than try to achieve neutral liquidity. And I just wanted to make one point on the FCNRB window. I actually feel that it is a measure which should possibly be last on the line. And also, I do expect some kind of import restrictions to come on items like electronic items as well as. So those are the things which are positive to look for.
I think the measures were somewhat underwhelming given the expectations that had built up. But I think it has also created sort of a fuzzy expectation that more measures are on their way. So this, this tantalizing bit that Mr. Jaitley has, given us might just keep the hopes of more effective action alive. And that might work as some kind of a floor for the rupee, facility for bringing fresh capital, fresh money in, is through a more targeted program and not just lifting some regulatory curbs, was the need of the hour. I believe that they won't hike the rate. I think they'll just go entirely by the headline print and the fact that, at least in the near term, the oil price effect is being mitigated by softer food prices will sort of make a case for a data-dependent move, which certainly just doesn't justify a rate hike. And I think the RBI will sort of keep seeing how the government responds in terms of specifics, in terms of the import curbs, and so on, before moving on the rate front.
Market expectations of the measures had probably were too bullish. People were expecting a lot, which was probably not warranted at this point, and that is why there was a little bit of disappointment with the measures that were actually announced. In addition, there was also news that Trump is still going to go ahead with the $200 billion of tariffs on imports from China, despite the news of talks earlier in the week. So I think combination of those factors, clearly rupee is likely to be under pressure as a result of that.
Okay, so as you heard, there was some amount of disappointment and perhaps more radical moves like tapping the NRI deposit scheme or import duty on gold and on electronic goods is something that the street expected. Let's see. It seems like the government has kept its powder dry for now, and it's just the first salvo in a series of steps that we could see over the next few weeks and days. I know the market is under pressure, but there are some stocks that are bucking the trend today. So you have the entire oil marketing pack that is making an attempt to recover. BPCL, HPCL, IOC. There has been some stability in crude, so maybe a bit of a pullback seen there. Pharma stocks continue to move higher, so names like Torrent Pharma, Syngene, Divi's Labs has hit a new 52-week high. So these are names that traders are piling on the upside. However, the bad news continues on the macro front. Goldman Sachs has downgraded India to market weight from overweight, and they've changed their stance on India after being bullish on it since 2014. Nimesh is here with details of that report. Nimesh, what's the rationale behind this downgrade?
Goldman Sachs was having an overweight stance on India ever since 2014, and only now they feel like the risk reward is not favorable, and they've cut the weight to market weight or so to speak a neutral weight from overweight. As I said, they basically feel that the risk reward is not favorable, essentially because of elevated valuations, potential slowdown in terms of economic activities, and the election concern as well. Remember, we'll have at least 3 state elections and a general election in the next 12 months. So that's something which has started to playing out in the minds of the investors as well. And typically, India's premium to the MSCI EM has now crossed 58%. And typically, if that happens, over the next 3 to 6 months from then on, India tends to underperform. So that again is the reason why they feel in the near term there are headwinds for Indian markets not to outperform. In terms of sectors, surprisingly they've upgraded I2 to overweight. They remain neutral or market weight on pharma. In terms of other sectors, they continue to be overweight on private banks and metals, but they've dramatically cut down their weightages on industrials and auto stocks from overweight to market weight. So essentially, they have a Nifty target of 12,000, which means a further upside from here on. But from being overweight for last 3-4 years now after hefty valuations and the fact that India market currently commands a huge premium to the MSCI EM, they feel that India will really underperform, and that's why they've cut from overweight to market weight at this point in time.
Okay, so double whammy of slowdown in growth on one hand and the upcoming elections which could curtail spending on the other hand. That's the reason for the downgrade coming in. But ahead of the two-day JP Morgan India conference, which begins in New Delhi from the 19th, we caught up with the top brass, Sajid Chinoy, Bharat Iyer and Kalpana Morparia, to know what they have made of the macros and the micros, the weakening rupee et al. Here's a quick snippet of that interesting conversation.
Over the last 48 hours, all EM currencies are lower. Asian currencies, many of whom are current account surplus economies, are also weaker today. So India is simply mirroring that effect. Maybe over the last 10 days, we've occasionally seen signs of that. Exporters are not hedging, importers are front-loading. So there are things that policymakers can do to reverse those expectations. My sense is what you saw over the weekend was just a start. There was a clear commitment to staying on the fiscal costs. There was a belief that we've got a big battery of measures we can introduce. Let's not bring out the bazooka right now because it's too premature and not necessary. So I think we should just take a deep breath. In a world which is worrisome, India's fundamentals ultimately will shine through. Inflation is running below 5% in India. The current account deficit is, yes, high at 3%, but not at 5% like 2013. And we've seen the biggest improvement in our twin deficits in the last 5 years. So when the dust settles, markets too tend to be more discriminating. And I think we have to hope for that we are not one of those fragile economies. There are many other examples right now.
If you look at consumption-related sectors or even consumption proxies like, the retail banks, for example, they are beginning to come off the twin disruption caused by demonetization and GST implementation. They are feeling good about earnings. Between August and January this year, yields had already gone up, 140, 150 basis points. So, the twin vulnerabilities of higher oil prices and higher cost of capital was already beginning to play out. So, that was the smarter thing to have done, and we've done it. Structurally, India is still one of the best emerging markets out there, be it in terms of the medium-term growth profile that we have. The depreciation in the rupee within an extent is actually par for the course. And actually, corporate India is not going to fret too much because we have to appreciate that we need a competitive currency not only to boost exports, but also to protect our domestic industrial complex from imports. I mean, look at the number of industries which have asked for protection in the last 2 years. Steel, carbon black, tires, rubber, I could go on. So, quite a few of them would actually, welcome, the rupee depreciation within nominal levels.
Other than the power sector, which I know is a challenge, and there are varying estimates in terms of whether the haircut is going to be 70% or 60% or maybe even lower. So, other than that, if you look at the way the entire metal sector has behaved, frankly, it's taken all of us by surprise in terms of the recovery. I think the way the Reserve Bank of India actually choreographed this entire thing is pretty admirable.
Okay, well, let's drill it down to individual stocks then. Enough of the macros. Let's talk about Manappuram Finance. That stock is under quite a bit of pressure today. It's trading at a fresh 52-week low. If you're wondering why, Abhishek is here to tell us more on that. Abhishek.
RBI has rejected Manappuram's acquisition that they wanted to do in Indian School of Finance. So, Indian School Finance Company. So, they wanted to acquire about 85.4%, which they had announced way back in June, July. So, RBI has sent a letter to ISFC on 12th of September. The reason cited by RBI was that the change in shareholding and the change in management is not going down too well with them. However, ISFC had sought time with RBI and they will present their side of the view to RBI, and let's see how the outcome pans out. Back to you.
Okay, so that's the reason why Manappuram Finance is under pressure. But moving on to the pharma space, Glenmark is in the news again as the US FDA has begun inspection at the company's Baddi facility today. Ekta joins in now with those exclusive details. Ekta.
Well, yes, it's been a spate of US FDA inspections that we've seen for a couple of companies. So it started with Sun Pharma's Halol facility, then the Mohali facility, and now it is Glenmark's Baddi facility. We do understand that it is a US FDA inspection which has begun today itself at the company's Baddi facility. It is expected to be a product-specific inspection or a PAI, which means that it is an inspection which takes place by the US FDA before they give their go-ahead to a particular product that the company has applied for in the US. Now, it is expected to be a PAI, but it was expected to be a short notice PAI. That means that the company was aware that the US FDA could come anytime, but the notice given by the US FDA in order to start this inspection was quite short in terms of duration. Remember, Baddi, as of now, contributes around 10% of their total US sales, so it is significant in terms of a manufacturing facility. It has quite a few filings from the dermatology space, I understand, from that particular facility.
For the markets, it's not gotten better. In fact, it still continues to sulk at the low point, down almost about 420 points, and on the Sensex, that is, and the Nifty is still down more than 100 odd points. Just take a quick look at what's happening across the global markets. Remember, markets like Hong Kong had a huge fall today, almost a 350-point fall. The European markets also not doing too well. It's an across-the-board problem, so markets like the DAX, etc., are down about %0.5 or so. But fuel prices, that continues to be an issue for our own markets as well. They continue to widen holes in consumers' pockets. Fuel prices hit a new benchmark, with petrol and diesel prices hiked by 15 paise and 6 paise per litre respectively. Petrol in Mumbai costs a whopping 89.4 rupees per litre now, and diesel is priced at 78 rupees a litre. In Delhi, petrol is retailed at 82 rupees per litre and diesel at 73 rupees a litre. Meanwhile, the Karnataka government has also cut fuel prices by 2 rupees a litre. Okay, so that's the issue really. Fuel prices hitting record highs at the moment. But moving on, Prime Minister Narendra Modi has begun his 2-day visit to Varanasi, where he will celebrate his 68th birthday. The Prime Minister will visit Narur village to spend the day with children of a primary school, aided by a non-profit organization, Room to Read. He is scheduled to address a gathering at Banaras Hindu University's amphitheatre tomorrow. He is also expected to make an important announcement relating to the welfare of the city. Okay, and on that note, let's also talk about some stocks that are in the news this afternoon. Anisha is here to give us that very list. Anisha, what do you have?
Good afternoon, Sonia. I'll start with Reddington. Now, that one is down about 5% in trade after the company disappointed a tad bit with the buyback price. Remember, the details came out today and they are looking to buy back 1.1 crore share at a value of 125 per each, and the acceptance ratio is a little below 3%. Moving on to KEC, wherein Macquarie has written a note on KEC. They maintain the outperform rating, but they do believe that there is an upside risk to their order inflow target. In fact, they say they estimate a 7% upside risk to their order inflow estimate for the next couple of years. So that is taken positively by the street, up around 3% on that one. Divi's Laboratory is in focus because Philips Cap has actually written a note on it, and they've upgraded it to a buy with the target price of 1,550. They see it as a multi-year opportunity, and they say they have upgraded it in order to capture supply opportunity in the near future as well as the mid-term. Moving on to Sterlite Technology, a lot of the brokerages are quite bullish on this one, and now they have announced that they're looking at expanding their optic fiber cable capacity by a significant amount, and that's the reason that stock is excited in trade today. A couple of sectors that are buzzing in trade, well, these wind renewable energy players are buzzing, so names like Suzlon and Inox are up around 6 to 9% today, and of course sugar stock that has been buzzing all of last week, and today also pick up any name with a name of sugar in it and they're all buzzing. So Rajshri, Uttam Sugars, Awadh Sugar, Dhampur, Dalmia Bharat, to just name a few, are moving higher, and Prash Industries as well. Today also it's up around 9-10%, and last week it had a stellar run as well. Back to you.